Hey there traders, and welcome back for episode 115 from the StockBandit.tv. It's a place you can always find trading videos to make you better. And this week we have a holiday shortened trading week. Obviously with the market being closed Monday, we have only 4 days to make it count. So we got to be selective out there, got to be on our toes and make every trade count for the next few days. So let's take a look at the major averages. And of course we know that's going to impact most individual stocks. They take their cues from what the overall market's doing, so that's where our week begins. We take a look at the Nasdaq, S&P 500, and of course the old man Dow 30. So up first is the Nasdaq. We've got a very well-defined trading range in place here. We've been finding support down here at this 2269 to 70 area. So we'll call it 2269. That's been the spot that the buyers have been stepping in to protect this index on pullbacks. We've been bouncing from that area as we've approached it in recent weeks. At the same time, we've got some overhead resistance right up here where we topped out last week at 23.26. So that puts us in about a 56 or 57 point trading range here. And obviously last week we saw both ends of this spectrum tested. You know, we saw some weakness early in the week. We saw a bounce midweek, and then of course weakness again to finish the week. And so this index was down about 30 points last week, and it led the way to the downside. At the same time, we've had much better volume kick in now that January is here. So much higher participation, but very limited follow through here. In fact, no follow through. The short-term trading range is lateral. So this week I'm going to be watching support down here at 2269. I'll be watching resistance up here at 2326, and more importantly, a close outside of those boundaries. That's probably what it's going to take for this index to get back on the move. If we do roll over here and we do undercut this support area at 2269, the next stop is probably down here at this former resistance area, 2205 neighborhood. So that'll be the next level I would keep an eye on if we do break down. If we do break out to the top side and clear this 2326 area, then of course this index could just continue climbing and building on this base that it's constructed over the past few weeks. Okay, for the S&P 500, also a very well defined trading range here. We've got resistance from the December highs at the 1130 area. We've also been hitting that area pretty regularly here over the past couple of weeks, 1131 being the low. So we'll just call it 1131. Okay, that's short-term support. We also have resistance up here that was hit a couple times last week at the 1150 area. So we're in essentially about a 20-point range here. Now, Friday, we did come down again, hit this support area. We were able to bounce just a few points off of that and finish slightly off the low end of this range, but we're still hovering in the lower half of it for sure. Now, we also have this rising trend line here that started in early November. It was validated in mid-December. It was almost tested in late December. With that New Year's Eve pullback, we didn't quite touch this trend line, but we threatened it a little bit, and then we bounced from there again. So this is also a very valid trend line, and also note how it corresponds with this horizontal support zone. These are basically one and the same at this point, as this trend line has come back up and is now corresponding with this support zone at the 1130 area. So if we do break through 1130, this index could easily head lower and start to challenge possibly this 1113, 1115 neighborhood, where we found some resistance here throughout November and early December. So that's what I'll keep an eye on. If we do break out through 1150 to the top side, then this index could, of course, just keep on climbing. That's what it's been doing so much of for, I guess, about 10 months now. For the Dow, this index zooming out quite a bit. The next key level to the top side is this 10,800 area where we saw it bounce from in the summer of 08. That's not a real key level, but it is the next level to watch on the chart here. And also to the downside, we've got this rising trend line here, uptrend line that started from March of last year, validated in July, tested last fall, and then of course more recently we've seen it approached a number of times, including on Friday of last week, during which we actually touched that trend line. That's around the 10,600 area, and so it's not too far away. We actually did see some pretty good volume along with that, but for now the short-term and longer-term uptrend is still intact. So keep an eye on this rising trend line here. If we do break it, we've got room to come down and possibly test former resistance at 10,500. If we get through that, then of course we could see a little bit better, sharper profit taking kicking in. But for now, the trends are still solidly up. The bulls are still in command of this market. That absolutely deserves our respect, and we've got to make this holiday shortened week count. So thanks again for joining me for this episode. I will be back soon with more videos, but in the meantime, trade like a bandit.